How's it going, everybody? It's going to be our episode 3 in our playbook series. This episode is going to be about the value retrace trade. This trade is a very important trade in the volume profile style of trading. So all you're going to need for this type of trade is a volume profile. We like to have two separate volume profiles. We have one for the full session and we have one for the overnight session. I will quickly show you my settings for these if you guys would like to match the settings. So here you go. This is the full session one. We have it set to 70, 100, number of rows, and total volume. Style doesn't really matter. Style is just personal preference. But here you go. This is my current style. And I'll quickly show you my overnight session as well. Overnight session is set to custom. 6 p.m. Eastern the previous day to 9:30 in the morning on the current day. It's set to New York because that is the Eastern time zone. We have total 70, number of rows, and row size 100. So we're going to talk about a bullish value retrace trade and a bearish value retrace trade in this episode. Make sure to hit that like button and subscribe if you guys enjoy this type of content. And let's get started. Okay, so the day we are going to be using for our bearish example is August 9th. So if you guys would like to follow along, that is the day that we are using. So this is basically the fully played out value retrace. This is what it's going to look like after it has fully played out. We're going to show you this, and then we're going to start from the very beginning and show you kind of how it played out in the beginning. So starting here, you can see that we had the value area of the previous day. So we had the value area right here on August 8th. We want to keep an eye on where that value area is if we are trading outside of that value area on the current day. So you can see how on the current day, our pre-market is generating a lot of value above the value area of this day here, the previous day. So that is the first thing you need to happen for the value retrace. We need to have a lot of value, and then we need to trade outside of that value on the next day. Once we have started to trade outside of that value, if we start to fail back down and we lose that value area high, that triggers the value retrace trade. So what you want to look for the value retrace trade is if we have a 30-minute candle closing inside that value area. So for this case here, if we mark this out, if we close below 45.10, that will trigger our value retrace. What are we going to target for our value retrace? We are going to target the POC of that day, the value area low of that day, and if you want to, you can target a complete retrace of that entire day, so like the low of the day. But for the most part, we only want to focus on targeting the value area levels. Okay, so first things first, we look at the value area of the previous day. We need to generate value outside of that value area, so in this case, above it. And then the trigger for the entry is a 30-minute close inside of that value area. So we've generated value outside, and then we failed back into it, and we closed our 30-minute session inside that value area. Now, obviously, with a 30-minute candle, those closes are going to take 30 minutes. They're going to be a little bit long, I guess you would say, if you're scalping. So if you want to be a bit more aggressive, you can use the 15-minute close or the 5-minute close, but just understand that that's going to be more aggressive. You're not going to have as high of a strike rate if you use those lower time frames. Typically, we like to use the 30-minute for the highest strike rate. Okay, so in this case, the 30-minute candle closed right here. We closed around 45.03. So if we waited for that the 30-minute candle to close, we would have taken the short on that candle close right there. Now, where would we have put our stop loss? Our stop loss, we would like to be above the 30-minute candle outside of the value area high. So if the value area high in this case is 45.10, we could put it above 45.10, but we would like it to be above the 30-minute candle. So in this case, our stop loss is pretty far away. And let me mention that these are not always scalping trades. These trades can sometimes take a lot longer to play out, but they typically are done within the same day. So they'll still be a day trade. They're just not always going to be a scalp. Sometimes they can take a few hours to fully play out. So that's why you're okay with these higher numbers as far as your stop loss goes. But okay, so we need to understand where our stop loss is going to be, but we also need to understand, what is this trade offering me? How many points of a value retrace is this trade offering me if we get the full retrace? So in this case, it's offering you 19 points if you get that entire retrace. And that's because we took the 30-minute close way down here. If we would have taken that when we first started to break the value area high, then it's offering us 25 points. So you can look at it as a trade if you just take it right when it breaks that value area high. In this case, the best case scenario, you're offered 25 points. But let's say we took this trade the way we're supposed to, and we waited for that 30-minute close. It's offering us 19 points. So our stop loss, not that good. It's offering us 19, we're risking 14. So realistically, not the best. I would say for this example, if we took the 30-minute close that was a little bit below the value area high, it's about a 7-point difference. So in this case, it'd be a little late. What we would do is we would put our stop above the value area high instead of above the 30-minute candle. So we'd probably put it somewhere around there. So let's say we would risk about 9 points and we'd be looking for 19 points. And that gives us a much better risk to reward. If you took the other candle closes, let's say the 15-minute or the 5-minute, and we had a much better entry, then we could use the 30-minute highs as our stop loss because we still are maintaining a very strong risk to reward. Typically for these trades, as long as you can get above a 1.5, it's a safe trade to take. Okay, now that we know how the trade plays out, let's go ahead and replay this and see how it played out for this exact day. So we're going to replay this starting out at 9:30 because that's when the cash open is. So this is what the pre-market profile would have looked like if we were starting out our trade plan at 9:30 in the morning. So we could have said, okay, let's take a look at our previous day's value area. We would have marked out the value area high. We would have marked out the POC and the value area low. And we would have said, okay, if we start to lose 45.10, we want to look for 44.87 and 44.84. Let's go ahead and play this out and let's see what it does. So that was a little fast. We can play it out a little slower. Let's go back and we'll play it out on a 1x speed. Okay, so right away, we start to get sell pressure on the open. The only problem with this trade is you had this little double bottom right here. The 9:30 candle and the 10 o'clock candle both found a bottom on the value area high of this day here. So you would have been a little worried to take that as a sell, which is why we like to wait for the 30-minute candle to close, because these moves here would have trapped you. If you would not have waited for that candle to close and you would have taken that sell pressure into that value area high, you would have been trapped. It would have bounced about close to 10 points. And you would have been trapped. But if we waited for the 30-minute to close, yes, it looks like it's a little late, but it played out beautifully. You would have gotten your target almost immediately. This was a really quick value retrace. Typically, they're not going to be that quick, but this one only took about an hour to fully play out. If I had to say, it's probably going to take closer to 2 hours. I'd say about 4 to 5 30-minute candles. So this one only took 2 30-minute candles. So it was very quick. But okay, that was the value retrace. So let's go over it one more time. You need there to be value generated. So you want to see a nice, consistent, typically D shape, but you just want to see a decent sized node. So you want to generate value. Then you want to generate value outside of that value area. So either above it or below it. In this case, it was above it. So we generate value outside of it. Then we start to sell off and begin to reclaim that previous value. Once it begins to reclaim that value, we can take a trade, stop loss above the 30-minute candle or just outside of the value area, and we target a full retrace of that value area. This used to be called the 80% rule. If you guys read Dalton's books on volume profile, market profile, auction theory, that sort of thing, he doesn't use the 80% rule anymore. But if you read his older books, that is what he'll refer to it as. Okay, now that we've gone over a bearish example, let's go over a bullish example. So for a bullish example, we are going to use July 17th. And let me pull this back to 9:30 here. So this is what it would have looked like during our trade plan. So I'm going to do this much quicker than we did the last one because you guys should understand the value retrace at this point. So, okay, first thing we look for, the previous day's value area. So we have the value area low right there. We have the POC right there. And we have the value area high right there. Next thing we look for, we want to be generating value on the pre-market above or below that value area. And we're generating value below the previous day's value area. So that means we can look for a value retrace if we can break and hold above that value area low. So let's let it play for a few candles. Let's see what it does here. Okay, so immediately, the first 30-minute candle of the day closed above that value area low. So we are starting the bullish value retrace. So what we can do is we can take a long on that close, stop loss below the 30-minute candle or just below the value area low. In this case, they both line up. So let's say right around there. And let's see how much it's offering us. To the POC, it's only offering us 5 points because it's closing pretty high. To the value area high, it's offering us 11.5 points, which is giving us a 1.84. So as long as it's above a 1.5, that is a good trade. In this case here, it is closing, let's see, it's closing about 5 points away from the value area low, so that's not too late. But like we were saying earlier, if you want to be more aggressive, you can take the 5-minute close or the 15-minute close as your entry. Okay, now that we have our trade established here, let's let it play out. And there you go. So again, this one was a little quick. Let me see. That's about average. So this is about 4 30-minute candles. So typically, like we were saying, about 4 to 5 is what we look for. So this took about 2 hours to play out, which I know in scalping sense it's an eternity, right? You're going to have to hold these trades for a long time. But this would be seen as more of a day trade, not a scalp. So you guys will have to work on holding on to your positions. Okay, so this one played out beautifully. Let's go ahead and let it play for the rest of the day, and let's just see what happened afterwards. This one looked like it continued to break out higher. Okay, there's the whole day there. So this one, if you would have left a runner, like we were saying earlier, you can go for the full retrace of the entire day. So if you want to go for the high of day as a runner, you can do so. And in this case, your runner would have been hit right before the closing bell. So typically what I like to do is I'll leave a little bit of a target on the POC. The main target, the bulk of the trade, will be the opposing value level. So if we're taking the trade off of the break of the value area low, the opposing level would be the value area high. So we'll take a little piece off the POC, depending on where it is, obviously. If it's only giving us like a few points, we won't do it. But if it's giving us like 5 or so points, we'll take a little piece off there. We'll take the biggest piece off of the opposing value level. And then if we want to, we'll leave a runner for the full retrace. Most of the time, I am not going to leave a runner for the full retrace. But if I do, it will be less than 25% of the position. So about a quarter of the position. But all right, guys, that is it for the value retrace trade. Hopefully you guys enjoyed this video. Hopefully you guys learned a lot. If you guys have any questions about this pattern, please put them in the comments below and I will get to them as soon as I can. Hit that like button if you guys enjoyed this video. Make sure to subscribe and I'll see you guys in the next one. Peace.